and welcome to another video from StageAnalysis.net. This week's video is the weekend update of the major US stock market indexes and indicators, where I'll go through some of the major US stock market indexes, plus the key market breadth indicators, including the Bullish percent index, the advanced decline line indicators, the new high, new lows indicators, the percentage of stocks above their key moving averages, and some custom indicators exclusive to StageAnalysis.net, including the sector breadth chart with relative performance rankings of the major sectors, and the point and figure breakouts minus breakdown charts. The purpose of this weekly market breadth update is to help determine where stocks will go next based on the combined signals of all of the market breadth indicators, which was referred to in the stage analysis method as the weight of evidence. To see more of the market breadth charts and our regular breakout stocks watch list, go to stageanalysis.net. And to get all of the latest videos, subscribe to the YouTube channel, and please hit the like button below in the video on the YouTube page and leave any comments too. A quick disclaimer: all stock charts and ideas presented are for educational purposes only, so always do your own research before making any trades. Okay, let's begin. So, I've been away for a few weeks. I went on a skiing trip and just got back from Elmau in Austria, so I'm feeling refreshed and getting back to the markets now. So, obviously, last video we talked about a potential short-term top from the market breadth indicators. They were showing some divergences, and so let's see what's happened while I've been away. So let's begin with the S&P 500 on the left up here. As you can see, we did continue higher initially, and this week it looks like we've had a pullback, but nothing major to show on the chart. Just a small 1% pullback there, but it did make a new high and then closed the week near the low. So not a great sign in that regard, but we still remain in an uptrend. The Dow, it made a new high this week, pulled back, and it's pulled back close to its 10-week moving average or 50-day moving average. Obviously, it still remains in a stage 2 uptrend, but obviously the relative performance here is well below the S&P 500, as we said before. From around April time, it's been underperforming. The Nasdaq 100 continued to new highs again this week, but closed the week near the low of the week, so obviously it's not a great sign in terms of that, but we remain in a stage 2 uptrend currently. It's well above its rising 10-week moving average here, so we'll be looking under the surface in the market breadth indicators to see if that's got any kind of push in that. The small caps again remain weak. They've been weak since October 2018. We broke out of the stage 1 range, and it's made sluggish progress since. It's been going sideways, and basically it's in the beginnings of stage 2, but it's currently trading around its rising 10-week moving average, and it's above the rising 30-week moving average, so it remains in the early stage 2, but it has been underperforming, and obviously ideally we'd want to see the small caps outperforming in a strong bull market. So let's moving on. This week we saw, this is the 7 to 10 year Treasury bond ETF, which I've noticed a lot of bond ETFs breaking out to new highs this week. Some had volume, some didn't, but it's hard to tell with the bond ETFs. But we have had a stage 2 continuation breakout in the IEF this week. So the Treasury bonds have made a stage 2 continuation there to new highs. Gold also made a stage 2 continuation breakout this week. I did actually go long it myself this week in my pension account. It's showing some strong moves here. We had the stage 2A breakout early in the year, so we're potentially on the 5th wave here, or 3rd wave, depending on what you're looking at as the breakout point. So let's put from the stage 2 breakout level, we've had 1, 2, we're in the 3rd wave, so I'm making it from a more long-term perspective. But again, it's starting to outperform the S&P 500 here, as you can see with the breakout there. So next we have crude oil, which is in stage 1 here. It pulled back to the low of the range, so we still got potential for a stage 4 breakdown below the bottom of the range here. It is trading weekly. It's not a great stage 1 base here. It's been basing for majority of 2019, but it's near the lows, so, and the moving averages are pointing downwards, so we've got potential for a move lower even, or it could be, this could be the rebound here, but who knows. As always, we wait for the price action to give us direction. Copper, similar to oil, trading near the low of its stage 1 range. It's been again basing for a long time here. It attempted to make a stage 2 breakout, but it was still below some significant near-term resistance and failed and pulled back strongly towards the bottom of the range. So again, this one's got potential for a stage 4 breakdown, or it could be continuing to base. Again, we wait for the price action to tell us more. Next, we've got the NYSE Bullish Percent Index on the left up here. As I noted a few weeks ago, as price was breaking out to new highs, the participation with the bullish percent was dropping. We were seeing a bit of a divergence with the price action. So that what it means is the bullish percent is based on percentage of stocks on a P&F buy signal. So we had less and less stocks making P&F breakouts. So it's an analogy I like to use is a bit like a game of Jenga, if you've ever played that, whereas as you gradually pull out more and more blocks, the chance of collapse obviously increases, but the tower can stay up for a long time. So it all depends on what blocks are pulled out. So for example, if we got hit with some large caps, took some beatings, and I imagine we would get a collapse quite quickly, but they obviously hold up the stock market the majority of the time. So at the moment, if we saw collapses in some of the big fang names like Apple, Google, etc., we would see a lot more damage in the market, but they continue to hold us up currently. If you look at the NYSE percentage of stocks above the 200-day moving average down here, we're on a bear alert signal currently. I've highlighted the low of the range here on the 150, the 200 and the 50-day. So the short term is on a bear confirmed and failed to get back above its recent breakdown level here. So whereas the medium term and the long term 150 and 250-day haven't gone to bear confirmed yet, they remain on a bear alert signal as they fell below the 70% level after. So the bear alert signal, actually I did highlight some definitions here. So bear alert means that the chart is falling from above 70% to below 70% without yet generating a P&F sell signal. So if we go back to the charts, obviously I'm using line charts here, but the P&F charts have not yet gave that double bottom breakdown signal, so we remain on a bear alert here. Similar on the Nasdaq on the other side, both charts are making similar moves. So let's move on next. So, as I said, these were the definitions of the current market breadth status. This is taken from investorsintelligence.com, which I've used to generate P&F signals over the years. It's an excellent little site for education, and they have their own signals, etc. So, but this gives you all of the different signals. So bull confirmed, bull correction, bull alert, bear confirmed, bear correction, bear alert, and bull top. So yeah, take the time to have a look through those as they're really helpful. Next, we've got the NYSE advanced decline line issues. The NYSE cumulative line here remains in a strong uptrend. It's had a minor pullback at the top here, but it's got nothing to write home about yet. It hasn't given any kind of signal. The advanced decline line momentum index is low. We have the 200-day momentum index down here. This is what Stan Weinstein termed as the momentum index. And so this one, we've got a defined breakdown level here around the 150 level. So if this moved back below here, we'd have a sell signal. Currently it remains in a neutral position, diverging from the actual price action a bit since October. It's lacked momentum there. So the short term above, we made a move up to the top of the normal range over the last week or so, and it's now pulled back to neutral again. McClellan indexes and summation index both showing similar to momentum index. We've pulled below the zero line here, so we're currently in a negative on the momentum at the top here on the oscillator, and the summation index remains on a short-term sell signal. A move below down here would be more bearish. The EMAs haven't, the 10 and 30 day EMAs have not yet crossed over, so that remains on a bull signal there. So we've got a mixed signal in the advanced decline line at the moment. New high. Next we've got the new high, new lows. So at the top we've got the NYSE new high, new lows. So the grey is the new highs and the red is the new lows. So as you can see, and the Nasdaq on the right over here, we've got the grey dropped to 78 at the end of the week here, but we're still making a lot of new highs in the NYSE. The cumulative line at the bottom here remains parabolic, going higher, with the moving average strongly moving higher. We're most extended from that moving average we've been for a while, but there's no major signals in the new high, new lows to speak of at the moment. That remains on a bullish tact. Okay, next, these are my custom cumulative P&F breakouts minus breakdowns. So each day I chart the P&F breakouts and the P&F breakdowns using a double top breakout and a double bottom breakdown, and I chart these in Excel and create my own little charts. So the cumulative line here on the left, it made a new high this week again. The 20-day moving average is starting to flatten out here. We're getting closer to potential crossover there, but at the moment it remains on a bull signal. So the remaining charts on this, so we've got the 10-day moving average, and we've got the 50-day moving average, and we've got the 200-day moving average. So these are the moving averages of the P&F breakouts minus breakdowns, not the cumulative line. So these give similar to the momentum index in the advanced decline line. So as you can see, we've got a minor divergence here. We're in the 10-day in the short term. We're getting more bearish in the 50-day, but we remain above the zero line. 200-day, we're above the zero line, but again we're losing momentum. But again, nothing huge in this to suggest to get wildly bearish, but it is showing some minor divergences. Next, we've got the percentage of stocks above their 150-day moving averages. So again, each week I chart these based on the percentage of stocks above their 150-day moving average and work out the percentage compared to the percentage of stocks below their 150-day moving average. So this gives us a sector view of what's going on in the market. So at the moment, utilities remains as the top sector. It gained 1.45% this week, and it's at 78%. Whereas energy remains the weakest sector. Only at 25% of stocks are above their 150-day moving average in the energy sector. Again, moved up a tiny fraction this week. Technology is the second strongest sector, but otherwise the majority of sectors remain in the 50 to 70% range. So if we move on to the visual, you can see this more clearly. So in this, on the left scale, we have a 0 to 100% on the left. On the right, I note the ranges that are bullish or bearish. So above 60% is bullish, and below 40% is bearish. So, and the major signals from this is when all of the sectors move below the 30% level. So once they all get down here and then move back out again above the 30% level, is when we start to get some, that's like the key bullish signal. And when the majority of them get above the 70% level and then start to move back below again, is when we start to get bearish signals. So at the moment we're in the neutral and bullish range, which is normal in the bull market. So you generally tend to sit in the neutral plus or the bull range. So the majority at the moment are in the 60% range, with utilities leading, as we said. And on the right here, we've got the NYSE and the Nasdaq, and the color coding is just how they performed on the week. So it was red or green based on who was up and who was down. So okay, let's go back to the start. Okay, so what have we seen from this week's market breadth update? So we've got some price action moves of potential, showing potential short-term moves. We could well be seeing a short-term top, but the breadth isn't overwhelmingly suggesting yet. It suggests a neutral plus kind of signal at the moment, because we've still got multiple on bull signals. That could obviously change, but it's not wildly bullish, but it is showing some divergences. So yeah, I would currently give it neutral plus. We've got potential for a pullback here, but whether it becomes a bigger move is still yet to be determined, and there's nothing majorly signaling that yet. So I'll say a bit of caution is required, so we could be moving down in the short term, but we could also immediately thrust back up. We are in a bull market after all, so basically be careful and keep stop loss tight, and yeah, I'll see you on the next one. Oh, actually, sorry, forgot one more thing. Please subscribe to the videos and hit that like button, and yeah, thanks for watching. See you next time.